Now these definitions are provided over here. If our overheads have been under absorbed, then they have not all been accounted for, and an additional debt is needed. Additional debt means because we are in loss in the statement of profit and loss account. So that's why here we will make a journal entry debit under absorbed, or we can say debit statement of comprehensive income or income statement rather, and we can income statement and credit production overheads control account, production overheads account, whatever is given in the question. If overheads have been overabsorbed, then too high a value of overheads has been accounted for, means our budget was high and additional credit is needed in the statement, but we incurred lower amount. So debit production overheads control account, credit income statement, or overabsorb. That's why I told you that overabsorb is an income for us, it is credited, and underabsorb is loss for us, it is debited. Here we have accounting for production overheads. This T account is available. Actual overhead cost, and here we have what underabsorb. If we have overabsorb, it is shown on the debit side because in this transaction, production overheads control account is debited itself. That's why overhead absorbed are shown on the debited side. In this transaction, production overheads control account are credited. That's why it is shown on the credit side. Actual cost of all indirect is recorded as debt in the production overhead account. This is credit. This credit is either in the bank or payable. The actual cost will be made up of all the indirect production overheads, material, labor, expenses. So he's saying what in case of like actual cost, we includes what? We includes all the overheads. If actual cost is lower, we have a benefit. It is income or credit. If actual cost is higher, it has like debt or additional debit. So we are bearing loss. Overheads that are absorbed in the production are recorded and credited in the production overheads control account. This is calculated as OAR into actual activity. So this is the formula of absorbed overheads which we used earlier. And this formula is saying what? Our OAR is multiplied with what? With actual activity level. So ultimately here he is trying to communicate us what? That whenever you have under absorbed, it is debited against the production overheads control account. That is why shown on the credit side of the production overheads control account. Whenever we have overabsorb, it is credited against the production overheads control account. That's why shown on the debit side of the account. And here we have actual overheads. Actual overheads are shown on the debit side of production overheads, and absorbed overheads are shown on the credit side. For example, if we are going to incur direct material, direct labor, or direct expenses, we will say debit work in progress, and we will say credit either it is material control account, or it is labor control account, or it is like variable overheads control account. Similarly, if we are going debit production overheads control account or production overheads account, credit what? Credit like indirect material. Or so here we have what? We have the this discussion that absorbed overheads is called what? It is the process of work in progress, where we are doing what? We are calculating overhead absorption, absorbed overheads, where OAR is multiplied with actual activity level. So when the account is balanced at the end of the period, and the balancing amount is required to make the debit side of the account match the credit side, we have absorbed over absorption. We discussed earlier that if your absorbed overheads are greater than the actual overheads, then you need to balance with the over absorption. When the account is balanced at the end of the period and balancing amount is required to make the credit side, the account match the debit side, since we have under absorption of overheads. Whenever absorbed overheads are lower than the actual overheads, we are in loss, and this loss is called under absorbed, and this amount is shown on the credit side of the production overheads control account. So this is the whole discussion about the accounting for overheads, where we discussed three things. We started from the allocation, which is the question information. Then we discussed division of fixed overheads into production and service department. Then we have reapportionment methods. which is a repeated distribution method. We did an example of repeated distribution method, and then we discussed what is absorption. Absorption further includes mainly two, but we divided into three steps. One is called OAR, per hour or per unit. Second one is called absorbed overheads, where we are using OAR per hour or per unit. Step is called over under absorb, over or under. Either it will be over or it will be under absorb overhead. So either we will be in profit or we will be in loss. So this ultimately, to calculate this OAR, we are performing all these overheads. Reapportionment having three methods. One is called direct method. Second one is called the step down method. And the third one is called repeated distribution or reciprocal method. So we use the example of repeated distribution method, where process of reapportionment arise time and again until we don't get zero for all these service department. So this was the whole process of reapportionment.